In this video, I'm gonna review my simple pullback strategy that will make you filthy rich. Firstly, let me explain what is a pullback for the beginners watching this. A pullback is basically a correction that happens in an existing trend. So it's basically a retracement. So why is it so important for you to understand? Let me give you a live example. Let's say that right now the market is in an uptrend and you want to enter for a buy, but you do not want to enter right here. Why? Because you must understand that price will never ever move up in a straight line. It has to go up, retrace a bit, go up even more, and retrace a bit to create your higher highs and higher lows. So if you enter for a buy right here, there is a very high chance that a pullback or a trend reversal may happen. So instead of taking that risk, it will be much better and much safer for you to wait for price to pull back before you enter for the buy position. Now, I believe that the next question you have is, how do I know that the pullback will end here and not just continue going down? Don't worry, I'm here to answer your question. Well, based on my research and my experience, I have actually found 3 common levels where pullbacks usually ends. So the first level is your support and resistance. If you look towards the left, you will see that price has rejected this level multiple times. So we can draw a resistance level right here. Next, you can see that the price literally broke out of the resistance and made a pullback. And look at where the pullback ends. It ends at the resistance level, which has now become your supports. And then you can see price going up even further and start pulling back again. And where did the pullback end? At the previous resistance, which has now become your support level. Number 2 is your trend lines. We can draw a trend line right here connecting all the lower highs in a downtrend, because you can see like price is just rejecting it multiple times. You can also see that whenever price pull back towards the trend line, it always ended up going back down. So this is how we can know that the pullback has ended. Next, we have your moving average. So in this example, I am using the 50 period moving average because that is what price reacts to. As you can see, whenever price pull back to the moving average, it always ends up going up even higher. Sometimes when price pull back, it does not just pull back to any of those levels that I just mentioned. It can pull back to 2 or even 3 levels. So what I mean by that is that you can see right now in this example, price pull back to the moving average, right? But if you look towards your left, you can see that there is actually a resistance area which has become support. So in this example, this area right here will be called your area of confluence. So when this example, you can go ahead and increase your lot size because there is a higher chance that price is going to go up right now, because this is a very strong area of confluence which tell us that okay, price is done retracing and now it's going to continue going up. So when do you actually enter for the trade? The first method is that you want to enter when price is at an area of confluence, and it also shows you some sort of rejection candlestick patterns that tell you that price is done retracing and is about to continue with the overall trend. Here's what I mean. And right now you can see that price has pulled back to the trend line, but that's not it. It's also an area of confluence, because if you look towards your left, you can see that it's actually a support level which has now become your resistance level. So that's the first criteria. Right now price is at an area of confluence. And next, you can see price literally form like a bearish engulfing candlestick at this level. So a bearish engulfing candlestick is basically like a big red candlestick with a big red body that show us that there is a lot of selling pressure in this market, a lot of sellers inside this market pushing the price down. So now we see this bearish engulfing candlestick at an area of confluence. We can go ahead and be confident and take our sell position right here. So if you enter for a sell right here, you will place your stop loss above this last lower high or even above the trend line, basically above the area of confluence. And then you'll place your take profit at the support level right here. Yep, you can see that after price made its bearish engulfing candlestick at an area of confluence, it went down even further. So here's another example. You can see that right now price has managed to pull back to the 50 moving average. But that's not it. If you look towards your left, you can see that there's actually a resistance area right here, and it now forms as your support area. So now that we got our area of confluence, the next step is to look for a reversal candlestick pattern. Right here, price did a bullish engulfing candlestick that show us that right now this pullback is done. The buyers are back into this market and there is a lot of buying pressure pushing the price up. So if you want to get a sniper entry, you could even gotten in right here when price did these multiple small candlesticks, small dojis. So these candlesticks basically show us that price is indecisive, the market is indecisive. So when this happens, this usually means that a reversal is going to happen. Price is going to reverse from this downtrend to an uptrend. So yeah, you can enter for a buy right here, place your stop loss below this little support level or this last higher low, and place your take profit at the resistance area right here. And as you can see, this was a beautiful trade. The second method is to enter when price break through the counter trend line. So when price pull back to the overall trend line, you want to draw your counter trend line right here at the pullback area, just like this. When price break out of this smaller counter trend line, that is when you can enter for the trade. So here's an example. Right now, price has managed to pull back to this overall trend line. And when this happens, you want to draw like a smaller counter trend line marking this mini downtrend. So you want to wait for price to break out of this counter trend line, and then that is when you enter for a buy position. So right here, this is when price break out of the counter trend line, and that is when you enter for a buy position. And you can see the price just continue going up even higher. Here's another example in a downtrend. You can see right here, this is when price is pulling back to the overall downtrend trend line. And this is when you can draw like a little counter trend line right here. And you want to wait for price to break through this counter trend line. And when price break through the counter trend line, you can enter for a sell. But to get more confirmation, what you can even do is to combine this method with the first method, which is to look for an area of confluence and also your candlestick pattern, right? So if you look towards the left, you can see that this is actually like a support area which has now become a resistance area. And then at this exact resistance area, there is also your trend line. So that means that this is an area of confluence. And right now, we can combine this area of confluence with our counter trend line. And then the next step will be to look for your candlestick pattern that show us that price is going to reverse. And right here, we got your bearish engulfing candlestick telling us that there is a lot of selling pressure pushing the price down. So now we got multiple confluence for us to enter for a sell position right here. We can easily enter for a sell right here and collect our profits. Sometimes the pullback will be way too deep and you won't be able to draw like a counter trend line. So in this case, you will want to make sure you rely on the first method, which is basically to look out for your reversal candlestick patterns to confirm that price is done pulling back. This is why it is so important for you to master multiple confirmation techniques so that you do not just rely on one strategy alone. When one strategy doesn't work, you can rely on the other strategy. Yep, so you can see in this example, it's very hard for me to draw like a little counter trend line here because this pullback is just way too steep, right? So in this example, you use your first method, you can see that right here at this area, there is a trend line and it is also a support level which has now become a resistance level. So it also gives us a bearish engulfing candlestick right here, which tells us that price is done retracing and it's gonna go back down. And as you can see, after price did this, it absolutely collapsed. Absolutely collapsed, boys. I literally just gave you like this simple high win rate strategy for free, and all I ask for in return is for you to go down right now and click on that like button and hit on that subscribe button. Welcome to the tribe, and remember, you're just one trade away. Mwah.